Welcome to Killick & Co's podcast for the 22nd of April. We have a week ahead that is full of UK companies reporting. A number of big companies that we follow here will be featuring, and I think will be quite critical to give everybody an update as to the underlying tone of the economy in markets. That underlying tone in the UK economy will actually be revealed this week when the UK GDP number for the first quarter comes out, and it tends to be quite a wide split between analysts as to whether we are going to see confirmation or initial confirmation of a triple dip recession, as this will be the sort of second quarterly of negative returns, or will we just scrape through and see a small positive number? Either way, the economy is still very much flatlining here and in the UK, and indeed in the ECB, where we're talking this morning about some investment banks calling for a rate cut in the ECB, possibly as early as June this year. There's certainly scope in the ECB to do so, and mutterings about whether it's going to come in sort of April, well, obviously missed, but May and June still being speculated as to a possible rate cut there at the moment. Also, Japan continues to feature quite strongly. The yen has continued its weakness and still sits very comfortably around that sort of 100 level against the US dollar. We'll take a look at the chart a little bit later there. And the other big feature of last week was commodities. We saw a very big fall in the gold price, which has been a number of reasons being given as to why the gold price came off. The word deflation has resurfaced as a possible motivation, but there are also other areas of technical selling and possibly selling coming out of Cyprus, which may have had an impact, all culminating in 1 week. There has been a small recovery in the gold price, but we'll take an overall look at some of the commodity charts. Okay, so starting first chart this week just really serves to highlight how busy this week is. I won't obviously try and go through all of these particular numbers, but the ones in black are highlighted are the companies which we will be focusing on with our research reports available, and so this is the sort of first week in earnest. I will highlight Glaxo. We'll take a look at a chart there later, but GlaxoSmithKline had a very good week last week with confirmation of a potential new blockbuster drug available for a once daily lung disease treatment, and also we have the first of the banks coming out this week with Barclays. Later this week, WPP is always a good indicator of global trends. Last week we just want to highlight that Visa, which is a company, US company, which we are following here at Killick & Co. We've updated our buy note in light of the recent results coming out from Visa, and again a little bit later in the presentation we'll take a look at the chart and how that is performing. So let's just look at some of the charts of interest. This is the gold chart. This is a short dated chart showing over 1 month what happened to the gold price. You can see really just as it came through that 15-20 area, which was many perceived to be a sort of technical level, encouraging quite a bit of short-term selling or selling of the gold price, culminating in a sort of 9% correction on 1 day alone. We have seen a bounce back in gold at the moment, and a number of obviously cheerleaders for gold have been out saying that the fall has been overdone at the moment, but that's clearly sent a sentiment signal. It really about what is going on in the commodity space. To put gold into context, their move over the course of the year, it's still been a very strong performer over maybe 5-year period now. So we have seen a sort of largest correction into what still feels to me as if it's in a bull market, but we'll obviously watch the trend of that over the course of the next few weeks and months, I'm sure, to see that picture more fully revealed. Let's look at all the commodities though, because this is the CRB index, which does include oil being a major constituent of the CRB index. This is a 5-year chart. This shows the recession that hit in 2008-9, very significant decline there. But then as QE programs were implemented, we started to see that affected through the commodities space initially. And certainly around this area here, it was certainly a cause for concern for inflation expectations, particularly for, say, the UK, where we do consume commodities, we do import them. This is for running our cars around, for example. But that's been a steady decline since then, and really just in the course of the last few weeks it's been under a little bit of a renewed pressure there at the moment. The relief obviously from lower commodity prices is lower inflation, and that is something that the UK badly needs at the moment in a period of stagnant earnings. That we do need to get costs lower, and clearly that will be helpful at the petrol pumps, for example. But the question mark is whether we are into a period of lower inflation or are we into a period of deflation, and that was possibly one of the reasons cited for the weakness in gold of last week. In terms of the currency, I do want to just highlight that this is the weakening of the yen versus the dollar over that period since end of 2012. We had a little bit of a reaction here, but very quickly we've resumed back up towards the very much top end of that chart. It's sitting just on the cusp of 100 at the moment. Possibilities that may go through this week. Certainly this week on Friday we have the Bank of Japan target rate decision later this week. No expectations have changed there, but Japan certainly will be at the forefront of thinking during the course of this week, I expect. Just a few stocks to highlight. I do want to highlight GlaxoSmithKline. For many years this stock has been a little bit too dull for words in terms of its return, but 2013 completely different, up 27% or so year to date, and certainly looking good ahead of corporate results that are due to be published on Tuesday. It fits into that sort of category of a company yielding 4.5%, good cash flow, and certainly a product that is selling well into the emerging markets at the moment. It's been attracting money along with stocks such as Vodafone. This is the Vodafone chart. Again, another high yielding share, good cash flow. Bit of corporate activity talk here around Verizon, and has been some of the leading performers, which has been taking the FTSE 100 higher at the moment. So commodities has been very weak, but these big cash flow companies have been continuing to perform very strongly, and 20% or 27% year to date on Glaxo is a stunning figure. Apple has been heading in the opposite direction. We have results from Apple tomorrow evening. The shares have retraced over 40% since the peak at the moment and are back down into territory at the moment, which more will be revealed as they publish their results that are due out on Tuesday. And finally, this is the chart from the Visa, which is the company I mentioned at the start. We have a buy note out. Company reports last week were very good. We've reiterated that buy note, and again, speak to your broker if you would like a copy of that particular research note.